Hello, hello. Welcome to episode 27 of the Golden Question podcast. In today's episode, we're going to be answering the question, what happened to the big, fat, ugly bubble? And I say that in quotes because that is exactly what Donald Trump has said in the 2016 first presidential debate with Hillary Clinton. Wall Street Journal just released a video and an article explaining or attempting to explain why the stock market is going up. Meanwhile, the actual economy is not reflecting that gain or that increase. And they sort of hinted at the right answer. They said that the Federal Reserve was keeping interest rates low and that was helping prop up the economy. And excuse me, not propping up the economy, propping up the stock market. Now, I know I've explained this several times in previous episodes, and especially in my Why I Didn't Vote for Trump episode, which I think you guys should listen to because I delve into a little bit of healthcare, something that I haven't really talked about. But when Wall Street Journal, said that the Federal Reserve was the problem, they didn't really say it was a problem. They sort of said that the Federal Reserve was keeping interest rates low and that was help propping up the markets, but it wasn't a problem for them. And they didn't explain what are the consequences of this? Are there any long term, any short term consequences of this, right? They just left that out in the open. And I think part of what we're seeing in the media, the reason why the media, these big corporations, why they don't want to point out a lot of these problems, a lot of these structural problems in our economies, because they have everything to gain from these problems. They have everything to gain because obviously these corporations are also benefiting from these structural problems in our economy. They're benefiting from these low interest rates, allowing them to go into debt easier, allowing them obviously to make their own investments, to overvalue things. And as I said before, in relation to other countries, once you're in the bubble and you've already invested so much in, you don't want to get out or you don't want to point out the problem, especially when you're a news agency. You don't want to point out the problem. Now, it may be, you know, you may feel like it's right to point out the problem for ethical issues, but you have everything to lose if you point out the problem, right? Imagine CNBC or MSNBC. I don't even know which names are what anymore, but imagine one of these news media outlets comes out and says, "Yeah, the economy is overvalued." What's going to happen? I mean, the 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 owners of these corporations, they're going to lose money. Their assets are going to come crashing down if they say their assets are not as worth are not worth the value that they say they're worth. Obviously the value is going to go down. So it's in their every incentive, it's in their every interest to keep this misinformation going because it benefits them. And again, when you're in the bubble, right, as I said before, I gave the example of a boy collecting baseball cards and working for baseball cards, right? He took all the money that he saved up and he acquired a bunch of baseball cards. It took him a lot of effort, a lot of work getting them. But he thinks they intrinsically have value. But then what if one day he wakes up and says, wait a second, you know, these don't have any value. Is he just going to go ahead and throw them out and then tell his friends that he's been trading with that they have no value? No, he's going to keep that information to himself. He's going to keep the truth to himself, but he's going to go ahead and lie and spread false information that they are valuable so that he can, cash out in a way, so that he can have time sort of to get rid of, his collection. But in the meantime, he wants the lie to continue. Same thing goes with the value of the dollar. I think a lot of countries are realizing that this dollar has no value, not in the sense that it's not backed by anything. I mean, that's obvious. It's not backed by anything, but it's not backed by a strong economy. That's what has kept the dollar strong even when we got out of gold, is that people had the perception that this dollar was backed by a strong economy. But once people realize that the US, all the factories in the US have long since been abandoned, and the US doesn't produce anything, we're lacking savings, we're actually going into debt from all these other countries. Once more and more countries realize this, once more and more foreign investors, foreign central banks realize this, they're going to stop acquiring dollars. But in the meantime, they've already acquired so many dollars. They've already traded so many of their own goods for these dollars. They don't want to come out and admit it. They want to keep the lie going so that in the meanwhile, they could start selling some of their dollars. And we're seeing that in China, in Russia, in a lot of these other major countries, in India, that slowly they're getting rid of the dollars, but at the same time they want to keep it in a controllable fashion. They don't want to just dump all their dollars on the market. Obviously, then that's going to ruin the value of the dollars that they currently have. So it's in everybody's incentive, the media outlets, anybody who's in this bubble, right? Once you're in the bubble and you realize you're in the bubble, you don't want to get out, because if you get out, you have to pop the bubble. I think that's a good analogy, right? If you're a little if you're a little speck in the bubble, if you're, let's say you're a bee in the bubble and you need to get out, you have to pop it. And that's obviously at a massive disadvantage to you because you rely on that bubble, right? You have assets that are valued, overvalued, and so that's also inflated. And what's dangerous is the Federal Reserve now has inflated the biggest bubble we have ever seen. I mean, you could point out in the 90s we had the tech bubble. In the early 2000s we had the housing bubble. So you had all these different bubbles in these controllable areas. And then you could say in the late 2000s you had the auto bubble. So, prior you had all these bubbles that were sort of in these different sectors of the economy. But now we've seen this bubble spread to the entire economy, in which every sector, I would argue, is in a bubble right now. And so the media outlets, they have no incentive to realize to point out this bubble. You have foreign nations also not incentivized to point out these problems. And then last but not least, you have the president himself, who's obviously, he's in the bubble, right? Before he was a president, you could say he was outside of the bubble. He was observing, the politics of everything, and he was pointing out the problems so that he can get elected. But as soon as he got elected, he stopped identifying the problems that is of the economy, and he claimed it was a big fat ugly bubble. And what happened to that bubble? Did it pop? I mean, I urge somebody to ask him. I mean, I wish that was on the debate when she said, when Trump said that, the stock market's going up. She should have said, wait a second, didn't you say in 2016 that we were in a big fat ugly bubble? Did that bubble just, the seams of that bubble, the outer ring of that bubble just randomly disappear, and now all of a sudden we have real economic growth? Of course not, because he's in on the bubble as well. So the bubble is still here. And again, as the Wall Street Journal pointed out, but it didn't, again, fully elaborate on why it's an issue and what are the consequences. And that is the Federal Reserve is behind this bubble, right? A large reason why these stocks are going up are, company buybacks, share buybacks, where obviously the company buys back its shares. And where does it get that money to buy, to purchase its shares? Obviously, it gets them from going into debt. And where is all the money coming from that it's borrowing? It's coming from the Federal Reserve, right? And this idea that when you go into debt, you're just tapping into other people's savings is no longer the case. Obviously, in a healthy economy, that is the case. If you were to borrow, let's say, it's from somebody else's savings. But in this economy, it's not. There is no savings, right? You have an economy right now, and that's the beauty of interest rates, is that they signal to you some of the problems in the economy. The problem we have right now is that nobody is saving. There is no savings, yet everybody is going into massive amounts of debt. Everybody's taking on massive amounts of debt. How can that be? In order for you to take massive amounts of debt, or to take on, I gotta, make sure I'm wording this right. Take on massive amounts of debt, there needs to be a massive amount of savings that you could pick out from. But we don't have the savings, and yet people are magically going into debt. Where are they getting this money from? It is from the Federal Reserve. The Federal Reserve is monetizing the debt of this economy. And obviously, a couple of consequences. Obviously, the first consequence is that they warp the economy. There's malinvestments. There's sectors of the economy that are bubbling up that aren't supposed to. Prices going up in areas where they aren't, and there's investment going in areas where it shouldn't be, and it's not going in areas where it should be. And I think a perfect example is all these unicorn companies that we see emerging that don't have any profits, that their business models are highly flawed, and yet somehow they're making these huge amounts of profits, right? The birth of these unicorn companies is as a result of this malinvestment, this warp in the economy that is as a result of low interest rates and encouraging people to go into debt. Because again, it's all fundamental. If you look at the philosophy behind it, a person who uses somebody else's money uses it in a less efficient way than if he were to use his own money. So if somebody were to actually use his own savings to invest, use his own money to invest, his hard work, he can correctly point out which companies, or he'll actually do the research to point out which companies are viable, which companies are profitable. But if you're just borrowing money, if the Fed is just printing money, doling it out to people, and then those people then take that money and invest it, they don't care where that money's going. They just want to, go to whatever they're incentivized to go to sectors that have bubbles, because then that means they could cash out. They don't care about the fundamentals of the company in which they're investing. They only care about the return, right? And especially the short-term return. So this is, a couple of consequences, a couple of side effects that occur when the Fed steps in and tries to micromanage and control the economy. And with that, we've seen low interest rates, and that is the reason why we have this bubble economy, the reason why the stock market's going up at the expense of everybody else, at the expense of Main Street. And as I say many times over again, the Fed is helping promulgate this saying: Wall Street's gain at Main Street's expense. And that's essentially what it is. And so low interest rates give the illusion that people have a bunch of savings and that people are incentivized to borrow. But there is no savings, and that's where the Fed comes in. The Fed ultimately is the saver, but it's not, the money that it's the savings in this factor is all a result of money printing, right? It's not actually somebody's hard work that's going into this piggy bank and that people are now borrowing from. It's the Fed just printing money, putting it into this safe, pretending that it's savings for that other people to borrow. And again, as I've said, that causes a lot of malinvestments, and it causes bubbles. And again, the whole boom bust cycle that we've been seeing for the past century is a result of the Fed. The Fed creating a bubble by printing money, people now pouring in, investing in things that they shouldn't be, essentially gambling, right? You're essentially gambling. And then the bubble pops. And then the Fed then reinflates another bubble, and the bubble pops. But what's different about this coming economic collapse than any other one we've had before is that this one is a bubble the size of which we've never seen before. Because as I said, this bubble is everywhere. Every sector in the economy is a bubble, is inflated. It's not just one sector. It's not just the housing bubble. It's not just, the auto bubble. If it were those individual bubbles, then obviously people like me who point out these problems would just tell you to get out of that sector, right? If there was a bubble in the housing market, I would tell you don't buy a house now, rent. Or if there is or if you did have a house, I would tell you to sell, right? If there's a bubble in the auto market, I would tell you to just use public transportation or to lease a car. Don't buy a car. And any other bubble, if it were just reduced to an individual sector, you just get out of that bubble. But once the bubble is in the entire economy, if the entire economy is one big fat ugly bubble, as Trump said himself, then the only solution is to get out of the economy, get out of U.S. assets, get out of the U.S. dollar, right? Invest in precious metals, which have everything to gain from this collapse, and invest in foreign companies, which have everything to gain because they're the main producers. They're the ones that have the profitable business models, unlike most of the unicorn companies that we have in the U.S. And again, they're zombie companies. They're dead. They don't make any profits. The only reason what's keeping them alive is the Fed because they can just borrow money from the Fed and their investors, which also get their money from the Fed because they can be also going into debt to invest in these companies. And they also make the returns from other companies. So once you're in the bubble, everybody benefits in that bubble, right? They just share amongst themselves the cheap money in a way. And where does that cheap money originate from? It originates from the Federal Reserve. So Trump correctly pointed out all these problems, right? If you rewind the tape, Trump has correctly pointed out the problems, and now he's pretending everything's great. And then you have the Democrats now who are, again, pointing out the problems correctly. They're correctly pointing out the problems. Joe Biden himself said the stock market, look at the stock market going up, but your average person, I forgot what town he named in Pennsylvania, he said they were suffering. And Trump's reply was, "Oh, but their 401ks are going up." Again, it's all this bubble mentality. Hey, just pour money into the markets. Even if you lost your job, just pour everything into the markets and cross your fingers so that you can win out. Trump has now immersed himself in the swamp. And again, I like to look at the swamp as a part of the bubble, right? The bubble has gotten so big, and an effect of the bubble is that it's created a little swamp for politicians and for government to help again reinflate that bubble. And then the bubble helps them also in return because it creates this illusion that the economy is doing well, and so they can keep getting reelected. So what's frustrating is we see Trump now pretending everything's all right, and then you see the Democrats correctly pointing out the problems. That's the frustrating part. Um, and it's going to get really ugly once this bubble pops and everybody says, wait a second, the Democrats have been saying all along that the economy wasn't great, and the Republicans were saying that it was great. Obviously, the Republicans are wrong. And then they throw the whole idea of the free market, they throw away the ideas of capitalism. And unfortunately, they think that the Republicans embodied these ideas, but in fact, they didn't. Thanks for listening. As always, stay safe.